Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So this is our pre-Christmas Bitcoin update. It's lots of interesting stuff right now you can see on the market. And actually, speaking shortly, we have the bearish view in the short term, just because time for retracement has come. The euphoria from the victory of the Donald Trump on the president elections gradually fading. It has brought its fruits, and now the new drivers coming in the first stage. First of all, this is uncertainty, just because it's still some time until the inauguration, and it's a really big question how the Donald Trump policy will start to materialize in reality. So how actually it will be brought into life. This is first moment. Second moment, recent statement from the Jerome Powell that the Fed doesn't intend to buy the Bitcoin and make some reserves on it. It was negative moment, and actually points that it might be a really bumpy road on the way between the Donald Trump administration and the Fed position concerning Bitcoin. So if Donald Trump team tells about that we should buy as much Bitcoins as we could, start creating the national reserve and so on. So the Fed doesn't support this, and that's some hint on a possible inner conflict in two different authorities in the United States government. So this is, of course, in the short term also bearish moment, and that already has got some reflection on the price performance. So on the daily chart, I will explain a bit later why we have the bearish, but if you take a look at the higher time frames, on a monthly chart, Bitcoin turns to some doji performance, which we think particularly indicates this uncertainty. Yes, of course, the end of the year also have its meaning here, just because it was outstanding performance of the Bitcoin in this year, and investors thinking about the protection of the results. They're thinking about the booking profits by the end of the year, so it also makes them to make the decisions on possible closing of the position, something that also keeps Bitcoin prices flat, so it doesn't let them to keep going higher. So end of the year also has the special meaning for the current moment. But from the technical point of view, the high wave usually indicates either indecision or uncertainty. So, and next direction will be depending on the breakout of its range. So upper breakout means that market should keep going higher. Downside breakout means deeper retracement. So that's what we start seeing on the monthly chart. So if just a few weeks ago market was somewhere here and showing the way up to the next target, now situation has changed. The same we could say on the weekly chart. Here we do not have yet any particular patterns, but sharp reversal last week gives the hint that probably we could get here something in the perspective of the month. So if we will get deeper retracement, for example, somewhere to the 86, that might be bread bottom buy opportunity. A double repo sell that might be appearing here suggests even deeper retracement, supposedly back to the 73 or 75 area. So the weekly chart is definitely something to keep an eye on. It might brought really big important patterns. Now let's go back to the daily, why we think that market right now looks bearish. So mostly it explained by performance here. Just recently, when the market was out of this high wave pattern, so here's also high wave, you can see. We said that market should keep going higher because it has broken out and actually to our predefined target. So here we had the butterfly, if you remember, and it has a target right at the upper border of this channel. But on the way back, you can see market hasn't stopped on the minor retracement and actually dropped back in the range of the high wave pattern. Even more, it hasn't stopped at the predefined confidence support that we have discussed and dropped significantly lower, which is breaking the normal bullish performance. I would say that market actually stopped here around 92 area, mostly due to the oversold support. If we wouldn't have the oversold, it could drop even lower. So that's obviously we have the bearish performance here. And as a result, as a product of this performance, we have two different patterns. First one is very short term, probably for this and next week, maybe even faster. I do not know what the actual activity will be during the holidays performance. So maybe if market will be very slow, then the realizing of these patterns might be a bit longer. But it's probably we're speaking about a few sessions. And next one is a larger scale. So let's go step by step. So on the 4 time frame chart, actually we have to acknowledge that in fact we still have got the free drive pattern here. This was a technical explanation of the drop. Fundamentally, the reason was, of course, in the statement of the Fed and some other negative factors, and some forecasts from the Fed as well concerning the rate. But technically, the reason still was the free drive pattern. So market has collapsed. Now, as the first pattern is based, as I said, short-term pattern is based on this engulfing. So you can see market has dropped right to support. Here we have 30%, 618 support, 94. But if you take a look again on the daily chart, you could see that here we have 19250. It's also 30%. So the combination of these two different levels creates the confidence support. And market is also overextended. It stands at oversold. So this creates not back chances for possible upward action. So in the kind of the some ABCD pattern. Besides here at this point, it's relatively close to invalidation point. So risk here is not really very big. So if somehow you're searching chance to go long on Bitcoin, that's the setup that you could think about. So your stop will be below this area because it's based on this engulfing pattern. Your target will be a result of kind of the ABCD. So it could be better seen on the next chart. Here is the ABCD pattern somewhere around 101 area. This will be the target of this ABCD pattern. This is a very short-term setup. More extended setup is based on this part, and you can see that might be a hand shoulders because we said that we have the bearish view, and that particular we will be watching for. Those of you who would like to go short should keep an eye on the 101, 102 area, because here the ABCD pullback triggered by the oversold and this pattern that we have here will be completed, and that will be the moment where you will have to make the decision on a possible short entry. So everything might be started by this hand shoulders pattern that we see on the hourly chart. It's particular to our chart, but on hourly chart you also could see it. Chances for downside action really significant, mostly because of this. So this is actually on the daily chart we see the breaking of the bullish tendency. So this performance breaks the bullish tendency and it suggests deeper retracement. That's why we think that it's really might start working. So that in towards what we have currently on the cryptocurrencies. So let's keep watching and see what will happen.